In this video, we'll be taking a look at a few chart analysis to get prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. And if you're interested in learning trade forex like professional, check out our complete forex trading course on Udemy. I have the link attached in the description below. So for those who participated in our community challenge, that challenge ended on Friday, and the winners are going to be announced on between Monday and Wednesday while we compare all the submissions we got from the competition. So if you're one of these contestants, keep an eye on our Discord. I have the link in the description below as well, and watch out for the results if you eventually become a winner. Okay, so without further ado, let's get started. This is the Go chart on the 4 hours time frame, and as you can see, we have an ascending channel, right? So this means gold is still in a very solid bullish trend all the way, from these price levels over here, right? So around this price levels where we have our all-time highs, we went higher, and now we seem to be in a very, very massive, bullish flag as some sort of a consolidation, which signals that there's a good chance gold may be heading higher, right? So I'm going to zoom in a little. I'm going to go down to the 2 hours time frame. Let's start from there, because we're going to be paying attention to the price action happening over here for us to spot out good trade opportunities for this coming week. Now on the 2 hours time frame, I'm going to zoom in. What we will notice is that we had a very good bounce off of these lows. So over here, a support level over here, and we had a nasty rejection from this massive wick over here, right? I made a big mistake last week, attempting to go short over here. I drew my symmetrical triangle like this and attempted to go short, aiming for some quick profits for this or whatever, but as you can see, I was wrong, right? And that speaks to having clean charts, so charts that are as clean as possible, right? So that's what happened. I missed that trade, and here we are today. But fortunately for me, I was able to get in on the buy, which you can see from this massive breakout with this green candle. So we broke out from this symmetrical triangle, signaling that there's a good chance we may be heading higher. So going out to the 1 hour time frame, I think the time to get into this trade is past. To get into this trade, I've gotten in around this price level when we broke out from the symmetrical triangle. So right now I have a position over here. My stop loss has been adjusted to entry to safeguard the trade. So what I think you can do if you want a chance to get into this trade will be waiting for some sort of consolidation over here, followed by a bullish breakout. So if this happens, then this could be a good opportunity for you to go long. That's if the market doesn't just rip when the market opens. Another reason why I think there's a good chance we may get some sort of pullback is because price has started creating some sort of a bearish divergence. You can see price creating higher highs with the price, and in the momentum indicator, which is our RSI, we have price creating lower highs. This is not a very valid bearish divergence, but it's something to watch out for. So this could eventually make us see price going all the way down to these price levels, consolidating a little before maybe probably reversing to the upside. So if this happens, then you should look for an opportunity to go long, right? But there's no guarantee that this will happen. So the market may open and we may just keep going higher. So in that case, I would advise or recommend you stay away from the market, try not to jump into any trades, and wait for the next possible opportunities. So this is simply, for those who are already on a go chart, already on a go trade rather. So this is something to watch out for. Another opportunity to go long could be waiting for some sort of price levels. So over here, I'm going to give you an example real quick. So taking a closer look, you can see we have two highs. So 1, 2. So we could see price coming aggressively into this area of resistance, consolidate a little, and then give us a final breakout to the upside. So this could be something to watch out for to go long if you are currently not on a go trade, right? So when you go long, obviously when price gets to the resistance level of the ascending channel, then you have to adjust your stop loss to entry if you're not closing your trade, just in case we do get a pullback from these highs down to this downside, right? So if this happens, then I'm going to review and reanalyze the chart, and probably it's going to be next week Friday. I'm going to send you more updates, but this is my best best case scenario for gold right now, I don't see any reason why you want to be going short, because the chart looks extremely bullish. If anything changes, I'm surely gonna update my community in the Discord. So if you're not part of our Discord yet, use the link in the description below to join our Discord. So to reiterate, for you to go long, either patiently wait for a pullback, a consolidation, and then a move to the upside. So this could be a very good opportunity to go long if this happens. Else, I would suggest you simply wait for price to do its thing. So you may likely get another opportunity if price does come into this area of value, consolidate, and get a breakout. So this could be another opportunity to go long. For now, I have to be honest with you, I don't see any reason why I want to be going short right now, except maybe you want to go and trade 5 minutes time frame to look for short trade positions. But for me, the chart looks bullish, and even though we may get some pullbacks along the way as we go higher, I still don't think it's worth taking a risk to going short right now on gold. So that's it briefly for gold. Moving on, we're talking about US100, which is Nasdaq. Solid bullish trend. You can see we have 1, 2, 3, 4. So 4 good bounces off of this trend line, and we seem to be seeing some sort of really solid bullish momentum right now. And price seems to be trading slightly above this area of value, which is a resistance level turn support, now attempting to break from this level. So I'm going to go down to lower time frame so we can focus on what's happening over here for us to see if we can spot our good trade opportunities for the week ahead. Obviously, this looks like a bullish chart, but like I said, there's a good chance we get pullbacks along the way as we go higher. So going down to the 2 hours time frame, for example, we're going to start from here. What we can see is that the chart looks like a bearish flag, like it's creating some sort of a bearish continuation pattern. So this is similar to what we have over here. So this is what I'm talking about. So we have something similar over here where we had a bullish bearish move to the downside, a consolidation, like an ABC pattern, then move to the downside. So similar pattern is what we can see over here. So a move to the downside, a consolidation, and possibly a move to the downside again, just like we had here. So this price action for you. But the difference between these two charts is we just bounced off of a very significant trend line on the daily time frame. So which means there's a good, and we created a higher low, right? So it means there's a good chance we may be heading higher, but that's no guarantee, that's no confirmation yet. So what I would take as my confirmation is taking a trend line across these highs and patiently waiting to see what the market does. So if the market consolidates over these price levels and then eventually gives us a bullish breakout, then this could be my confirmation to go long, you know, taking advantage of the bullish momentum currently on Nasdaq, right? So for a bearish case scenario, you want to see price reversing to the downside, consolidating on this trend line, and then giving us a bearish breakout. So even if we don't break this macro trend line on the daily time frame, a move from here back to these lows will give you significant profits. So let's see, say we have a breakout over here. So this downside will be 450 pips. So if you are aiming for this trend line again, that will be about 650 pips. So decent profits to, you know, take advantage of the bearish momentum if this happens, riding the trade all the way to these lows or these lows. Decent profits before we probably maybe eventually reverse to the upside, right? So this is my bearish case scenario, my bullish case scenario for Nasdaq. So I'm going to repeat once more. So for a bullish case scenario, we could see something like this, consolidation all the way up to this trend line, then eventually giving us a bullish breakout. So if this happens, we'll take out this trend line, we'll take out the resistance level of this bearish flag or ascending wedge or rising wedge, whatever you want to call it, then that would be my confirmation to go long. So right now I won't be jumping to a long position over here because it's a good chance to reverse down. And let me just put this into perspective. If you go long over here, for example, hoping we'll go higher, a reversal to the downside touching this trend line will be a 330 pips potential stop loss. So if you feel your risk management is good enough to withstand that, by all means you can take the risk, but I don't recommend that. Trading is highly risky. I'm not claiming to know it all. This is just my opinion on the market, and you can do whatever you like with your trading account, but do ensure to treat your account like it's an investment, right? So proper risk management. When the trade is a no-go, stay away and just be patient. That's I'm waiting for this thing to play out for me to go bullish. A bearish case scenario, which is unlikely in this case, but you know the market, nothing's unlikely, right? So I'm going to wait for a reversal, a consolidation, and a bearish breakout to go short. So this will be my confirmation to go short, quick pips, while the other case scenario will be my confirmation to go long for quick pips to the upside. Well, maybe a long-term trade or a swing trade if we do get a bullish breakout. So that's it briefly for Nasdaq. Moving on, we're talking about US30. So this is the Dow Jones. Chart looks clean. The difference between this chart and the Nasdaq chart is we currently didn't just bounce off of a significant area of value. So in this case, the significant area of value would be at this very support level you can see on my screen. So let me just go to the daily time frame. This is the 4 hours chart. I'm going to go to the daily time frame to see if there's any trend line we could probably draw across this chart for some sort of perspective on the market. So if you take this trend line like this, so you can see price is so far away from this trend line, and I don't think we are coming all the way down to these price levels before we go up, except maybe something catastrophic happens to the market. So this trend line is totally irrelevant right now, because even before we get to this trend line, we have this support level to contend with. So we're going to focus on this support level and neglect what we have over here. So that's another way to carry out your analysis. So if you are paying attention to price levels, focus on the price levels that are likely going to come first before paying attention to the ones that are farther ahead, right? So in this case, this area of value, the support level, is what we will be paying attention to. Now, to go short, right now, I don't see any reason why anyone wants to go long on US30. So the only reason to go long, let's start from there, would be waiting for price to get above this price level, hold it as support, bounce off it, and then get a bullish break to the upside. So this would be the only reason why you attempt going long. A break above this area of value, which is a support level over here, retesting it as a confirmed support level, consolidating on it, and getting a bullish breakout. This would be your only confirmation to go long on Nasdaq. Sorry, on US30, which is Dow Jones right now. This is the only way I'm going long. Alternatively, I could consider going long if we do get a move to the downside, consolidating around these price levels and reversing to the upside. So either this price level or this price level is going to be where I watch for my confirmations to go long. Other than that, I'm just going to stay bearish. And for a bearish case scenario, yes, two things I'm watching out for. Mind you, this is a 4 hours chart. I'm going to go down to the 2 hours chart, so this is clearly visible, right? So the 2 hours chart, this is what I'll be watching out for to go short. First, I'm going to wait for price to maybe reverse, come up, down, retest this area of value, followed by a bearish move to the downside. So if something like this happens, then this would be my confirmation to go short after being rejected from this area of value. And the breakout will have to create a good lower low, because if this happens, we have one low here, one here, one here. So the breakout would have to take out this low for me to go short. That's if I will be trading a bounce off of this area of value. That's one. Secondly, is my most likely scenario, right? I'm simply going to be patient enough to wait for price to come down, consolidate on this support level, and then give us a bearish breakout to the downside. But my entry is going to be over here. Stop loss is going to be above the consolidation leads to the breakout. Take profit target is going to be around, let's see. Take profit target is going to be around here. First one here, second one around the support level. So this is how I'm going to go short on US30. Other than this, I'm going to wait for a retest of this price level and a reversal with a good breakout to go short. So everything I explained in this video is what I'll be watching out for to either go long or short trading the US30. So for a bullish case scenario, I'm only going to consider going long if we establish ourselves confidently above this area of value with a bullish breakout after a consolidation, as I've explained in this video. And I hope that's clear enough. Moving on, we'll be talking about USD-CAD. Briefly, last week we talked about the possibility of us taking out this area of resistance, which could mean that price goes as high as this other area of resistance within this massive range. So you can see this has been ranging all the way from 2015, right? From 2015 we've had this massive price movement all the way to these current price levels, and now we've been trading within this range for the past 2 years, yeah, since 2022. So last week we talked about the possibility of taking out the resistance level, which could mean price going as high as these price levels. But unfortunately, we didn't get a sustainable breakout. We got a weak price, failed to close above the resistance level, and we had a good rejection to the downside. So two things are likely going to play out, and I'm going to explain what I'm watching out for to either go long or go short, right? So I'm going to wait for price to get to this trend line, consolidate properly, and then give us a bearish breakout. So a bearish breakout will be a confirmation to go short. Mind you, this short position may be short-lived because this is still some sort of a bullish trend, right? Because the only direction right now is up. Bounced off of these lows, consolidated our way up to these price levels, consolidated for 2 years, and I don't think we are likely going to take out this trend line or just reverse back all the way to these lows, which would mean going into next year before we see some sort of reversal and a possible breakout to the upside. Man, markets can be unpredictable sometimes, like really, really unpredictable, but this is unlikely, and if it happens, I'm going to be shocked. Mind you, I'm currently not trading currency pairs, as I've stated in the past so many times. But if you're going to be trading this, you have to be very, very careful because currency pairs are highly volatile, highly risky right now. So a bearish case scenario will be waiting for price to touch this trend line, consolidate, and get a bearish breakout. This will be my confirmation to go short. Why? To go long, still my thesis remains the same. To go long, consolidation, followed by a proper bullish breakout. So I think there's a good chance we consolidate within this tight range before getting that bullish breakout to the upside, if we're indeed going to go higher. So if this happens with a sustainable bullish candle breaking out from this area of resistance, then I'm going to go long. Just something to pay attention to for those trading USD-CAD, just in case you are looking forward to going short right now. So take a look at this on the daily time frame, analyze the chart, apply good risk management, and let me know in our Discord community what you decide to do with this chart, because definitely I won't be trading this. Moving on, crude oil, good charts. We seem to have had a bearish breakout from this symmetrical triangle, support level held, and now we've reversed back into the triangle, right? And we just took out this trend line from last week. Sorry, lines looks too much, but just to highlight the price levels I'm watching out for. So we have a good area of value over here, which is my current short-term target. So if you went long on this, I'm going to go down to the lower time frame, so 2 hours for example. So this seems like a very, very good trade in my opinion, right? Because going long right now would mean putting a stop loss around these price levels, and target should be probably around this area of resistance first, right? Because we have an area of resistance over here, as you can tell from the chart, and next target would be this other area of value. So when the market opens, I'm likely going to take this trade, low risk of course, and the reason why I'm taking this is because we've established a good consolidation here for a good price level to set your stop loss. So that means if you go long at this price level, stop loss is going to be around 150 pips or 140 pips as the case may be. So 140 pips stop loss, in my opinion, isn't that bad, for a trade like this. So that's it for crude oil. Nothing much to see here. I just want to let you know that there's a good opportunity to get in when the market opens. That's if the market doesn't open with a nasty bullish candle to the upside or a nasty bearish candle to the downside. So mind you, there's still a very good risk of reversal. So there's a good chance price reverses to the downside before going higher. So crude oil can be like that sometimes. So that's why when you're trading this, apply good risk management, stick to your trading strategy. So don't just jump in because I said it's a good opportunity to go long. I'm saying it for myself. If it aligns with your strategy, by all means, you can get into the trade low risk and let me know how it goes in our Discord. Lastly, we're going to be talking about USD-JPY. So, like I said earlier, if you go in now, when the market opens, stop loss is going to be around its lows. First target is going to be around its highs, which will be approximately 200 pips, I think. Okay, approximately 170 to 150 pips. The around its price level will be around 350 pips. Decent profit margin, in my opinion. Right. So, lastly, we're talking about USD-JPY. So, USD-JPY, I talked about this last week, with the possibility of price heading lower, right? But all we had last week was consolidations. This week, I think we're going to get more consolidation before we go lower. So for me to go short, I'm going to wait for a complete consolidation over here, followed by a bearish breakout to go short. Meanwhile, this is a daily chart, and I wouldn't be watching out for that consolidation on the daily chart because it's going to take forever for me to get what I want, right? So I don't see any reason why you'll be going long in this chart, because we just broke this area of resistance, fell below it, took at this trend line, and now we're trading below both resistance level and trend line. So going down to the 4 hours time frame, for example, is fair enough. I'm simply going to wait for a consolidation over here, followed by a bearish breakout to go short. So this would be a bearish continuation pattern, right? Signaling that the bears are still in charge and this bearish move is going to continue. And if you do that, entry is going to be around a breakout, right? If it happens, stop loss is going to be above the consolidation, at least at the breakouts. First take profit target is going to be around these price levels, and second one is going to be around the area of support. So this is how I'm going to trade USD-JPY. Nothing much to see here other than the fact that I am simply going to wait for a bearish continuation pattern for me to go short. So that's it for this week's analysis. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. If you're interested in learning trade Forex professional, check out our complete Forex trading course on Udemy. I have the link attached in the description below. And if you participated in our community challenge, results will be out between Monday and Wednesday, so watch out for that to see if you're one of the winners. So without further ado, I'm going to call it a day. See you next week.